This video will be focusing on the basics of market structure, and then later on I'll try to give some strategies along with a compounding example. So let's start from the very beginning. First things first is that how the market moves. So market either moves in an uptrend, right, which is form of higher highs and higher lows, or market move in downtrend, so which is formed at lower lows, lower highs, lower high, lower low, lower high, so on and so forth. And the third phase is consolidation phase, which is also called ranging, whatever you call it, is sideways movement, a lot of sideways movement. So basically when market create higher highs, higher lows, and then another higher highs, high lows, you will know that this is an uptrend. Vice versa, if market is creating lower high, lower lows, lower high and lower lows, this means it's a downtrend market. So this is like the very first thing that we need to know about the market structure. So let's clear all these things. Okay, there are few tools I will discuss here first, and then we'll move on to the strategy. One of the major tools that I use is called pivot points standard. This one, pivot point standards. So you have to mark this one on a weekly, monthly and yearly levels. Don't need to do anything else. Uncheck all the support and resistance, all these things. We don't care about any of these, we just care about the pivot points itself. So for example, let's say I have a yearly pivot. I'll mark my yearly pivot level here. So I'll try to see where okay, so this is my yearly pivot. You can color it however you want. I usually like to do this like a reddish kind of color. Again, go through the monthly, mark in the monthly pivot. I will mark the monthly pivot now. I have my own color scheme, so you can choose whatever color you like, however the line style you like. Also for the weekly level, we have a new week coming in from Monday, so let's just mark it out as it is. Okay, close it off. So we don't need any more pivot points here, levels here. So you can see on the chart, the yearly pivot, the higher the pivot, the higher it will be respected. So you see here price didn't try to break off, but it just fall down, consolidate it here, then do a small breakout and then fall back in, eventually did a breakout, retest, and then start going uptrend. If you see the monthly pivot, you see here is a rejection, there is a long bearish candle, then it breaks out, kind of do a retest, but now it seems like it's going to break out, fall back again. So let's see what will happen next. So this is one of the tools that I use. Other than that, EMAs, if you want, you can use like a 50 EMA, or it depends, but if I am using, I will use 50 EMA sometimes. I don't use it much, I don't rely on EMAs, but if you are into it, then you can use 50 period EMA if you want to. And the next important tool would be the profile, volume profile. So here if you go fixed range volume profile, if you click on it, then you can just draw the range that you want to see the volume profile action. So let's say what I like to do is I do the previous day's full day range. So I will mark the previous day. Let's say I'm here on this day, so I will mark out the previous day, and then this gives me the volume profile based on the price, rather than if you use a normal volume indicator, it will give you the volume based on time, what time was what volume. But here it gives you the volume at the price level, which is very, very helpful. So you know at this level, this you see here, this red line is called POC, point of control. This can be marked as a high support or demand, supply or demand, or support or resistance zone. Not just these zones, but all these high level zones are also very, very important. These high level zones This also kind of a high level. This is high level zone. This, you see this node, this high level node, this area high level node area, and here you see this low node areas here. If you see, price didn't stop at this level. Price just either get rejected, like get support, or rejection, wicked out, and then fall back in. So here price didn't like to stay for too long on this day, but here prices were consolidating. There was a lot of buying and selling going on these levels, on these nodes. So this is just good tool to have, good to know kind of tool you need to have on your chart. It gives you the exact levels that the buyers or sellers were interested, so which gives you a good buying or support or resistance zone. So I also mark here the previous day. So if I'm trading on this day, I know, okay, POC levels were here. I will also on the other high level zones, I will also mark out, okay, this level is this is of interest to me, but I will not focus too much on this. But I know that these are high level nodes, so I will be aware of it, and this one as well, POC also. So I will know what I need to do. And this blue line here, this is called value area low and value area high. So these are like 68% of the yesterday volume happened within this region. If you want to see the settings, nothing, I just change it to 100 row, and 68 value area volume 68%. So I want to see, and other things are same default settings. I think I changed the color, but I'm not sure, maybe. But the point here is that the most of the activity happens within this area. Volume activity happened within this 68 zone. So this kind of also gives you an idea, okay, this zone is also important, this is also an important zone, which gives you support or resistance or supply or demand again. And then you can see the yesterday's POC was expected the next day. Let's say if I was trading on this day, I know that price tried to break through. There was also monthly pivot just below, and then price get rejection from it, find the support and shoots up. So I know what's happening here, and then I can look for some trade opportunities here. Or similarly, you can mark this, because this is a range profile, so you can mark, let's say, last whole week. So let's say last whole week would be Thursday, Wednesday, it's here. So let's say the whole last week was this. So you see this area was highly interesting area for the buyers and suppliers. This price value would be 1971.770, and this range, this node also. Just be aware of these, and just see what the price is doing in these kind of nodes. Just be aware of it, what price is doing on these nodes, on these nodes, on these nodes, on this node. So just be aware of it, and then of course this line point of control will be very helpful for you to know about the support and supply or demand. And that's actually all about technical part, like all about the indicators, or you can say that's actually all that I use. I will remove it for now. I have placed this line, I'll remove it as well. So my pivots are marked on the chart, and I told you about the volume profile. Now on to the strategy. So I have a very simple strategy based on hourly candle. Actually I go anywhere from hour to the lower time frames. I don't go beyond 1 hour, because my target is to catch small movements in the market, and I only trade gold. This strategy that I'm discussing here, it's all about gold. I use it on gold, and it's working for me nicely. So my target is actually to see what the market is doing today on hourly chart, and then if I couldn't see anything clear, I will go to the lower time frames, like 15 minutes, 30 minutes, 5 minutes. But for the most part, I will try to see what's happening on the 1 hourly chart, and my immediate goal is to catch the next hourly candle, basically, because my target is always somewhere between 20 to 30 pips. Of course, if I see something very clear, I will head for those levels, those targets. But for the most part, my target is somewhere between 20 to 30 pips per trade, and I took like 2-3 trades per day. That's it. So it all depends on how you want to go through it, with your own way. But that's what I do, and it's working for me. So my only strategy is that I will try to go through the hourly chart, see what price is doing here. And I also have no specific session to trade, because I'm trading gold, and gold has volume in all the sessions. So gold, you don't need to worry too much about it. Of course, if you are going to target New York, you can get some good volume in New York, London as well. But in Asian also, I trade in Asian session, and because it suits me very well and it works for me as well. I make money in Asian session as well. So I would say in gold, you don't need to be very specific of this session. You just see the price action, what the price action is doing, higher high, higher lows, or lower low, lower highs. It depends how you want to trade. But let's go through some examples, right? So let's say this trade, actually I took this trade because of this one candle. I didn't took it. When I see this candle, inverse hammer type of candle, then I say, okay, yes, this trade I am going to take it, and I add position in here. So let's yeah, I think I can do this, yes. And then go to the 5 minutes time frame. Okay, so now you see here what price is doing. Price was making higher high, higher lows, higher high, higher lows. Let me mark it out. Higher high, higher lows, higher high, higher lows. Either this higher high or this higher high, higher lows, because it was expecting this one. Higher high, and then did a lower low, and did a lower high. When price does that, you automatically know, oh, the market trend is changing. Because whenever the trend is changing, it means that the high, the previous structure was not respected, so it makes a lower low and makes a lower high. And if you remember the downtrend definition, downtrend is high, lower low, lower high. So lower high, lower low. Market just does that, lower low, lower high. So I know that market is going in the downward direction. So just take the trade, just put the stop loss above, few points above the last swing, because we are on 5 minute chart. And then you just go through, right? You hit your target. Sorry, my target would be somewhere between 30 pips, not, yeah, somewhere between 30 pips, let's say. I would like to target 30 pips here because of this area and this area. So let's go. Yeah, so what I did, yeah, if I remember, I think I added a position here. So I add another position here. I put the stop loss here. And by the way, this trade, it was break even. I target to make sure that I do break even as soon as it makes sense. So I remember I did break even this, set the stop loss to this break even target, and then I put the same target as here. So it was 13 pips move, and this was 30 pip move. So it was overall 43 pips move that I catch like this. It's all based on market structure. If you can see, I don't use anything here. I don't use indicators. I don't, indicators are not going to make you money, basically. I mean, it works for people, and I have tried that indicator in forex market a lot. It didn't work for me. When I go back to the price action, it always worked for me. So, and sometimes I mean, for sure price action, I don't even need to go to the lower time frames. For example, if I see candle like this, or candle like this, or candle like this, I don't need to go to lower time frame, because I know that this is a heavy bullish momentum candle. So this is like a bullish engulfing candle, so I can take the trade directly here, target my 30 pips here, somewhere here, and then I'm in and out within an hour or two. And then you can find these type of trades every time. Every day you will find these types of trade. But someday, when you are not seeing anything, you can go drop down to the lower time frames, and then you can look in details like what is happening, and then you can target your goals. I mean, it depends. on what is your idea, what's your trading plan, but this is my trading plan. It's working for me. So I can take my 30 pips here, and this in the, like, I don't need, after this candle I don't need to go to lower time frame, because I know that it will give me 30 pips easily without any hesitation. And then I can set my stop loss here. I know the risk and reward, people are very look a lot for risk and reward. It does work for them, good luck to them, but for me I don't care. My winning ratio is high, so if some of the trades got hit, stop loss gets hit, even though risk to reward is not good, but end up even end up being profitable. So it is what it is. It depends on each individual. So you can go to 1 hour time frame. If you don't find any price action, or if you couldn't see, go to 15 minutes time frame and then try to see. And here you can see more details, and then you can see high highs and high lows, market structure. You can see clearly what market is doing, like this kind of price action. Yeah, price did make a lower low, lower high, lower low, lower high, and then make a higher high and higher low. But the thing is, price make a higher high, higher low, but it did make a lower high here. Once it make a lower high here, and it gives you this candle, this type of candle, then of course you don't need to think about anything. Just take your 30 pips. I target more here. I took this trade, but you can target your 30 pips, and then you are in and out of the market. It doesn't matter what your stop loss is, because you will get your target hit anyways. Your trade will be over within this 15 minutes candle. And I'm not cherry picking, I'm just remembering what trades I took, so I can tell you guys how. I also took this trade, I remember, because this was liquidity zone. I place a sell limit order here. If I remember, I place a sell limit here, and then I was targeting this zone. So I target like 60 to 60 pips, somewhere 60 something pips, so this area, and it just tapped it and then it went down. So it's with gold, you don't need to worry too much about it. I would say just try to judge the price action, and then don't hesitate to enter the trade. You will get you will get good setups every day. At least in my experience, at least you will get somewhere between 3 to 4 setups daily. But my setup means 20, somewhere between 20 to 30 pips. Yeah, if I am like this trade, if I know that's what's happening in the market, I will try to target more. But for the most part, my strategy is somewhere between 20 to 30 pips, and I take 2 trade, maximum 3 trade per day, and then I'm out. Recently I started my small account challenge for myself, like my own challenge, and that's why I was doing some aggressive trading, and I was still targeting a little bit more. I was trading quite like 4 or 5 trades per day, and it worked very well for, it is working very well for me as of right now. But let's see what happens next. So that's all about it. You can just judge based on the hourly candle, try to judge the next hourly candle, and then if you can see some price, like let's say you want to guess, like, okay, after this candle, you say, let's say you see the market here, you say, oh, next candle should be bearish as well. So you go to your lower time frames. This is your guessing game right now. So you will, of course, you need to go to lower time frames and verify what you are thinking is it correct or not. Now when you go to the lower time frame, even though your price action was bearish and you think also that it will go bearish, you don't see any bearish, you see consolidation here. When you see consolidation like this, you should wait for the actual momentum, actual volume to go. And then this is very close to Europe open here. So here Europe opened at this, at this candle Europe open, and then you are already in an uptrend. So you can take your trade here. You don't need to force anything. You force trade, just do whatever feels natural to you, and whatever makes you comfortable. And then you just target your 30 pips or your 20 pips or 25 pips, whatever your target is, and then you just get out and set the stop loss here. Eventually you will get, this is 3-minute chart, so you will get hit and then you are out of the trade. Actually you are done for the day, but again it depends on individual how much they want to trade. My suggestion would be to everybody is keep the profit in your pockets. The less time you are in the market, there is a less chance of ruining your account or taking hit. So if you are making profit, you have a profitable day, let's say you took two trades and you are in profit, I would say just turn off, go by your day, do your thing, and then come next day. Because two trades, if you are successful, you don't want the third trade to even out your one trade, and then you are in one trade profit, or even half a trade profit. So this is my suggestion. Last thing I would like to say is this compounding Excel sheet. So if you see this compounding Excel sheet, this is the challenge that I gave myself, and I'm right now following it currently. This compounding sheet is awesome. So you said I created this sheet. It's lot size I have created manually. You can use formula. I have the formula, but formula calculation doesn't work as you want it to. The psychology behind it, I know myself, I know my mind, I know my psychology. So I need to grow in a small step. So every 1 week, you see this section 5 trading days. So this is my 5 levels, 5 trading days, 5 levels. This you see here is not trading days, they are levels. So I don't even though they correlate with trading days, but these levels are some week you will get 2 extra levels, but some week you will get 1 minus, like your 2 stop loss gets hit, so you are back 2 levels. So it depends on the market condition and on at that week particularly. That's why I mark it as levels rather than days. But the correlation wise, 5 days a week you can trade, so 5 levels here. So I want to grow slowly because I need to build my psyche, because the more lot size you increase, the more riskier it will get eventually. And then once you go bigger, like mini lots, and because this we are talking about gold, so the pip value is 10 cent and lot of liquidity, lots of volume. Gold does a lot of wick outs and everything, so you need to be strong psychologically. That's why I created this Excel sheet to help me in check. So I know that I have a starting one. Let's say you start with $50, then it will adjust everything according to your $50 starting balance. And then you set your TP pips in pips. So let's say I set my 40 pips per day target, which is 20 pips to trade per day. So 20 pips to trade equals to 40 pips per trade per trading day for me. So by this logic, $50 balance in 40 pips per day split in 2 trades, you can grow your account to this amount, $360,000, in 120 levels, 120 days, trading days, which is 6 months, almost 6 months. But let's say if you can't achieve it in 120 days, if you double this, if even if you take 1 year, you have increased your $50, which is nothing, to this much amount, this much, 362,000. Of course, this is 80 lot. There's lots of psychology behind it. You have to be very strong mentally, emotionally to handle this kind of trading. But that's the whole point. You grow small so that your growth is incrementally happening, which is in turns helping your mind and your emotions in check. So for me, it helps me a lot because I am growing slowly. I am losing less. I am gaining less. But the thing is, I am building, my psychology is building up as I go along with this trading plan or compounding sheet. So level by level you go every day, you just hit your target, close off the chart, you're done for the day. Just be patient, just wait a little bit, because you have to wait for I think until 60 level you won't be feeling too much, or until 50 level you won't be earning much. But after 50 and 60 you will start to earn some good money. And then once you go by the one standard lot, you will be earning a handsome amount actually. Then it's just from there on, it's just a game of patience. Increase slowly, and you can adjust these values according to your whatever you are comfortable with. But this is so far I think I will be comfortable with as of right now. But maybe I go to this level and then I will say, oh no, I can increase a little bit more because I am comfortable enough, or I just want to stick to this level for, let's say, another 1 week or 2 week. I don't want to increase a level, so I will just continue earning my money. So it depends on you. But this compounding sheet, it will help a lot. Yes, I agree. Initially you will not see much profit, you will not see much. But the thing is, you started with $50 account, man. If you start with $100 account, then your growth will be a little, faster growth. And then again you will be at the end, you will be at your level 300,000-400,000, almost at the end of this 120 level you will be almost 400,000 account from your $100 balance. And if you start, let's say, with $500, yeah, then adjust your lot size accordingly, whatever you are comfortable with again. But in the end you will be having this much amount anyways. You will be a little safer, but it is what it is. So it all depends on what you want to, how you want to grow your lot sizes, how you want to. This Excel sheet helps if you are starting small. I would recommend, if you are new or newish, start small with a $50, $70, $80 account, and then try this Excel sheet. Try to be disciplined in this. Once you complete one level, click check, and then you can take 2 trades, split this 40 in 2 trades, 20 pips 2 trade per day, or 25 pips, and set it this to 50 pips, and then take 25 pips 2 trade per day, and then just see how you grow. And then you can adjust them accordingly, adjust this accordingly. If you increase to 25 pips 2 trade per day, then you will be 450. By the end of this level you will be almost 500,000 account. I know it's a 80 lot size, you will be trading 80 lots, but it doesn't matter. If you are building from 0.01, and then you grow yourself by your analysis, you come daily, you try to earn, you try to take the trades. Sometimes you will get SL hit, sometimes you will get your profits hit. For the most part, hopefully you will hit your TPs. Then I am pretty sure that trading this or even 100 lot will not be a problem for you, because it will become very natural to you, because you are disciplined on these all points. So I think that's about it, or all I want to say. And strategy wise, all these things that I mentioned here, maybe it's not 100% perfect, but so far it's working for me. If you guys need anything else or have any questions, let me know. And yeah, talk to you again.